It's not often that, that insurance is at its cheapest when it's needed the most. I think that you're going to see everything come apart in Atlas's hands, the Federal Reserve, next year, to the point where they won't be able to mask all the horrors that are going on, not only around the world, but right here in America. And once the Fed has to capitulate, it's all over. And if you don't have your gold and silver then, you're never going to get it.
Hey guys, thanks so much for tuning in. As we ring out 2015, I want to wish each and every one of you a very Merry Christmas. And we have Andy Hoffman back on the line to help us dissect what happened in 2015 and take a look ahead at the horrors that may be ahead for us in 2016. Andy Hoffman from Miles Franklin, are you there?
Yeah, and actually the horrors of 2015 are as bad as we've seen economically since, in many cases 2008, and in other cases beyond. I mean, in dollar terms, and can't emphasize enough the impact of falling commodities the world around. Again, the average currency is at or near its all-time low. In dollar terms, GDP for the world is at its lowest level since 1965. And this is just, as Bill Murphy would say, jacks for starters, because the impact, all the layoffs that are coming, all the write-downs, all the debt defaults that are coming as a result of this commodity crash will be seen in 2016, not 2015.
Yeah, but Andy, you know that the Fed has been telling us that everything is so wonderful that they were able to raise rates because all of their measures have worked beautifully. Unemployment is almost at historic lows. It's just everything's rosy. The economy is doing so well that I've prepared a celebration of all the Fed has done. Would you like to hear it? Here's a piece of music that I've selected from Chopin that I think reflects exactly what the Fed has done to our economy. I don't know, maybe that overstates it. What do you think? Has the Fed been so effective that they were able to raise rates, or are they just trying to save face?
Well, of course, it's about saving face. Of course, it's not saving anything. And people around the world are in shock and awe of what an incredibly stupid thing the Fed just did. I remember back when the Chinese devalued the yuan this summer, and right before it happened, I said that would be the upcoming financial Big Bang. Meaning they devalue the yuan and create a trade war around the world. But I said the only thing that could be more cataclysmic would be if the Fed raised rates. Now, the reason they raised rates, as you said, has nothing to do with the economy or even their metrics. And even if they want to, they like to continue to say the labor force improvements are increasing, but they're not. I mean, there's a reason why the Fed stopped. Remember, a few years ago, they said we're going to raise rates when the unemployment rate gets to 6.5%. Well, now it's 5%, and they still hadn't done it because they said it's no longer a meaningful metric. And Janet Yellen herself has said what I really need to see is rising labor participation and more full-time jobs and better wages, of which we've had none of them. And as far as inflation goes, I mean, they could say whatever they want about inflation. It's certainly not reached the levels that they want. They want this 2% mythical intermediate term inflation, which they still haven't gotten. So the fact is, as you said, that they have decided that if we don't raise rates now, everyone will call our bluff that we've been calling for this recovery. And it's not just been since a year ago in December when Janet Yellen, or in October when they ended QE and said we're going to raise rates in March, and they haven't done it. We're going back to the beginning of the whole tapering and recovering thing in early 2013. They still haven't raised rates. So they said, look, if we don't do it now, everyone's going to believe that we failed. So what do? They raise rates when the data, and remember they're data dependent, is the worst that it's been and getting worse. In fact, every single piece of data since they raised rates, which was only a week ago, has been horrible. Today alone, durable goods, new home sales. In fact, they revised down last year's new home sales. And there was personal income and spending. All of these things were bad. So the fact is they've set themselves up for the ultimate destruction in 2016. And we saw the initial reaction to the markets to what they did. And, aside from this blatant, market propping under completely the thinnest volume, the weakest market breadth of all time, you'll see it come back with a vengeance in 2016.
Yeah, and I think you share my pain. What we're doing over at SGT Report is trying to keep up on the real news on a daily basis, and it's really impossible to cover everything because there's so much unfolding globally, geopolitically, and of course domestically, that it's hard to keep an eye on everything no matter how hard we try. And I think you share my pain because you wrote earlier this week the horrible headline that stands above the rest. You wrote, "There isn't enough space to cover the runaway train, snowballing, avalanche, out-of-control pandemic that is the terminal phase of history's largest, most destructive Fiat Ponzi scheme. On any given day, there are anywhere from a half dozen to multiple dozen topics worthy of entire articles, each of which depicting how close to the brink we have come and how urgent the need to protect yourself while you still can." And I think that is the driving point that I want to share with folks in this interview. There still is time to protect yourself. We see 2016 coming at us like a steam engine, and what lies ahead is not probably good for the middle class, the working class, and the little guy in the United States of America, is it, Andy?
Well, what middle class and working class are you talking about, since it's all been destroyed by the Federal Reserve, and not just the Federal Reserve, but decades of poor fiscal and government policy, and of course monetary policy, and of course growth in the world. I mean, now the jobs that we used to do here, people are doing overseas, partly because our greedy corporations exported them to get tax breaks and low-cost labor, and partly because it's a growing world and it's competitive. But now you throw in, these, as you call it, the terminal phase of the Fiat Ponzi scheme, where they printed money into oblivion, and they've inflated the cost of living, and they've reduced interest rates to the point that you can't save anymore. And now capital investment has died, and the only capital investment we've seen has been into overvalued stocks with corporate buybacks, which, by the way, were financed with ultra low interest rates. So that's another source of demand that's going to go away if interest rates do in fact rise. And here we are, on the cusp of, not on the cusp of everything falling apart. Everything has fallen apart. The CRB commodity index hit a 40-year low 2 days ago, and it's barely above it today. The oil price, which I've been talking about forever, that it's going to be down for a long time and very low, is decidedly not transitory. Even though Janet Yellen just last week still called it a transitory phenomenon. And you look around the world at what's going on. We have record low measures of trade activity. Everything. I mean, not just the Baltic Dry Index. Everything imaginable is at a low that you haven't seen before. And you have pretty much every single central bank right now printing money, lowering rates, negative interest rates, quantitative easing. The Japanese are talking about increasing their monetization of stocks, and they can't even find stocks to buy anymore because they bought up half the ETFs already. So, this is the end here. I mean, the currencies are not going to get stronger in 2016. The commodities are not going to suddenly find miraculous demand, and supply is certainly going to be there for as long as you can imagine. Now, when you mentioned that article that I just wrote called "The Horrible Headline That Stands Out Among the Rest," and there were like 50 of them, all terrible things, the one that stood out the most was the plunge in U.S. silver production. This year alone, and I think it was September over September, it's down 20%. And I think for the year, even though so many people, even in our own community, saying, oh no, there's always going to be plenty of supply out there, I think global silver supply will fall this year, meaning 15 that just finished, by somewhere between 5 and 10%. And then when you look at the drivers, for instance, 55% of all global silver production as a byproduct of copper, lead, and zinc, you look back at our Miles Franklin All-Star Silver panel webinar from October 2014 when we said we can conceivably see 25 to 50% decline in silver production. And then we look at it and go, that looks about right. I think that's probably what's going to happen. And, and you look at the inventory levels around the world, the ones that are visible, like the Shanghai Exchange or the COMEX or the GLD. I mean, the inventories just aren't there anymore. And objectively, again, this is not my opinion, 2015 will be the highest ever year for global demand of both gold and silver. So again, you're talking about the perfect storm of surging demand, falling inventories, plunging production, and of course, the best fundamentals imaginable, meaning the money printing is just getting started.
Well, let's talk a little bit about gold and silver. It's been jumping around. The price, the chart has been popping up and down like it's on a trampoline. And, one minute we see it go up after the Fed raises rates. The next day it gets slammed down. Then it goes back up. Gold goes back up $20. But what's really going on here behind the scenes? Who's causing the price to go up 20 in a day? And then the next day the cartel takes it down. It must be real world demand.
Well, again, it's the whole economic Mother Nature thing. It's a simple Occam's razor situation. When it went up the day of the Fed rate hike, and Wall Street will say, well, it's a relief rally, it's a dead cat bounce, it's a buy on the news. No, it's because the news people clearly see that for what it is. There's no rate hike cycle going, and it's all BS, and it's gonna, if anything, it's gonna go back down rates in the future. And then, the next Monday when gold gets smashed, it's because the cartel did what they always do. They start on Sunday night, as they have on 126 of the last 131 Sunday nights, attacking, and they just keep going because they need to reverse course. And then, gold, it fights back. And this is the, where the rubber hits the road. And gold and silver are as they call it, the canaries in the coal mine. They're very, very tight markets. And when they go up, it tells the world that that their scam is falling apart. So, they're going to keep fighting and fighting. But again, the reason they're bouncing around at this level for everyone who's so down on them, and yes, I mean, mining stocks have been hit very hard this year, but gold and silver are only down about 7 or 8% this year. And the reason they're bouncing around here is because they're both at this level way below the cost of production where the miners can't survive. So as much as the cartel wants to hold it down, it's not very easy to push something down that's already too economic. And that's why this is such a great opportunity here. It's not often that that insurance is at its cheapest when it's needed the most.
Yeah, and I want to ask you about plunging oil prices and what that means to OPEC and Saudi Arabia specifically here in a second. But first, let me read this headline to you from Zero Hedge because I think it really sums up for everyone, including you, Andy, where we are at in this endless war paradigm, right? And it's this. Core durables goods orders plunge for 10th consecutive month as defense spending soars, most in 8 years. Can you even believe that, Andy? I mean, it's like we are now just an engine of war. Our economy is a war economy. More for the Pentagon, less for the common man. More for the military-industrial complex, less for businesses, less for those who actually produce. At this point, Andy, this is just an engine of war, and I think this headline proves it.
Exactly. I mean, again, and you had unchanged durable goods orders, even with this surge in defense spending. It's so comical every time defense or durable goods orders goes up, and it's because of defense spending, and Wall Street will go, oh, look, the economy is growing, because yes, theoretically it is contributing to GDP, but it's not productive. It's no more productive than healthcare, which, by the way, is now the number one component of GDP. There's nothing produced by healthcare, and if anything, the defense is destroying things and creating new things that need to be fixed. We talk about this war in the Middle East here, and every war in U.S. history, pretty much, people have had a vague inkling of why we're there. Every one, even Iraq, the weapons of mass destruction, okay, that's a reason, even though it was BS. We're in Afghanistan because of 9/11 or whatever, or Vietnam, we're stopping communism. But what's going on today is just a perfect example of everything is falling apart so quickly, not just here, but everywhere, that these wars are starting spontaneously for no reason. I myself, who I think I'm a pretty smart guy and I see the news all the time, I don't know why we're there. Are we there to fight ISIS? Are we there to fight Iran? Some days Iran's our ally, the next day they're not. Are we fighting against the Iraqi insurgents? Are we fighting against Russia? And by the way, why is Russia there? Is Russia fighting us? Is Russia fighting to support Syria? Is Russia fighting against ISIS? It's and then you get mishmash, in France, Holland, his approval ratings collapsing, and the National Front is taking over the political scene. So, okay, we had this opportunistic shooting, so we're going to go fight too. And now the UK says we're going to go fight too. Why not? We do everything the US does. To the point where you have all these countries and they're fighting. And 99% of people don't have the slightest clue what they're there for, except to have war and kill people and take things and create bigger wars.
Yeah, and just a little bit about ISIS. You hit the nail on the head. And most American people don't know why we're there, Andy. And most American people don't know that Senator John McCain, met with al-Baghdadi. There's pictures that prove it to be so. And of course, every single time there needs to be more excuses to put boots on the ground in Syria, we'll get Lindsey Graham on CNN saying the female shooter pledged her allegiance to al-Baghdadi. The war is against ISIS. We need to fight ISIS. We need to put boots on the ground. When we know that this government has fostered ISIS and funded ISIS, even to the degree that when Putin says, we'd like to help you defeat terror and we'd like to help you defeat ISIS, the Pentagon and the powers that be kind of say, whoa, 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 because those are their rebels that they want to use to topple Assad. It's all very geopolitically complex, and it's really the grand chessboard, I think, that was written about by Zbigniew Brzezinski. But what I wanted to ask you about as it relates to the Middle East, Andy, is what is going on with OPEC? Because these plunging oil prices may spell doom for the House of Saud. I was watching a commentary by Joseph P. Farrell, who I really admire, and he was saying that the end for the House of Saud appears to be very close. And then there's this Zero Hedge headline that came out on the 23rd that said, someone bets big on $15 crude as OPEC forecasts oil demand slumping until 2020. Boy, I'll tell you what, the whole petrodollar paradigm is set up with this relationship with the House of Saud and Saudi Arabia. What happens if the House of Saud falls?
Well, again, I don't follow the politics that closely, other than the fact that, of course, they're our only real ally. But the way that I've always looked at, our relationship with, or I should say, with the Saudi Arabian government is, look, you had in South Africa, you had apartheid. You had a very, very small handful of white people managing a group of black people and doing it brutally so, and it was inevitable it would fail. And the same, I've talked about the Indian government. There is no group of people in the world who despise fiat currency more and love physical gold and silver more and think of it more as money. And yet you have the people running the Reserve Bank of India somehow have become Westerners. They take their orders from the Federal Reserve and the Bank of England, and they are trying to, and they've destroyed the Indian population with inflation from the rupee. And now, by the way, they're trying to get the gold back, and no one will give it to them. But the fact is, this is another regime, which I've called the world's worst government, that's destined to fail. I mean, the paper printers in India are going to fall because a billion Indians are going to kick them out. And then you look at in Saudi Arabia, you have a handful of Western-loving leaders that are governing millions of people who hate Westerners and hate the United States. At least when the price of oil was up, they were spending so much on social programs, it kind of muted the issue. But now that oil's collapsing, and there's probably no nation on earth that budgets their government spending on revenues that don't exist more than them. I think it's $110 a barrel is what they base their spending budget on. You're talking about they would just downgrade it to junk, and their CD default swap rates are surging, and they have a cash crunch. So you're having a financial unrest at the same time you have Middle Eastern war and crashing oil prices. So the odds are that the House of Saud is on its last legs, and how much longer can they last? Especially because the guy who was the patriarch just died, so you can have all kinds of infighting. People trying to take over, and when they fall, they're going to be decidedly less pro-America and more like Iran's stance, which is going to make things even more difficult and make us even more warlike.
Well, as we round out the call here, Andy, let's just talk about 2016 and what you think lies ahead. And, I think it's going to be more monetary warfare. There was a headline from Zero Hedge the other day that said the trade war begins. U.S. imposes 256% tariff on Chinese steel imports. It just seems at this point, Andy, that Washington, D.C. is at war either financially or literally at war with just about everybody else on the planet. And that does not spell good things for the American people in 2016 as it relates to the confidence in the dollar, as it relates to the confidence of the people running Washington, D.C. and our government, and as it relates to U.S. bonds and treasuries.
Well, I mean, we just learned last week that in November, meaning last month, China sold more U.S. treasuries than ever in any month. In fact, foreigners as a whole sold more in November than any single month. So imposing tariffs on them while they're selling our treasuries, and they still got like $1 billion or $1 trillion worth left, is not exactly the wise course of action. It wouldn't surprise me why all of a sudden interest rates in the last couple of days have surged despite all this terrible economic data. Remember, the thing that's most dangerous to the United States of anything is rising interest rates because we have more debt than anybody and we have more hollowed out economy than anyone, certainly relative to our standard of living. So again, there's all kinds of terrible things that are going on. And what I expect in 2016, again, Occam's razor. It's simple. The currency wars must continue. You're going to see everyone on earth continue to lower interest rates and do QE until eventually Janet Yellen's hand is forced, either by a surging dollar or by falling financial markets, or the economy actually rolling over so badly that even her fabricated unemployment rate starts to surge. I mean, at some point it's got to go up, right? It's been falling for years. We're in the longest so-called recovery ever, even though it's not a recovery. And at some point it's got to go back up again, especially again, as I just told you, the CRB index just hit a 40-year low last week. It's the end of the year. It's Christmas time. The layoffs are going to really start. Remember, this was the worst year for layoffs since 2009, but this is nothing compared to what's coming next year. So I think even Janet Yellen's metrics are going to be failing her because I think you're going to see certainly the CPI measure she looks at fall, and you're going to see the unemployment rate rise. And again, the whole game ends when Janet Yellen has to admit it. What I call the Yellen reversal, when she no longer can even bluff anymore. Because again, what she's saying now last week, it's not even a matter of the economy's recovering. It's now we're raising rates because we're confident that it will recover, as opposed to what they were saying, which was it is recovering. So again, I think that you're going to see everything come apart in Atlas's hands, the Federal Reserve next year, to the point where they won't be able to mask all the horrors that are going on, not only around the world, but right here in America. And once the Fed has to capitulate, it's all over. And if you don't have your gold and silver then, you're never going to get it.
Yeah. Okay. Well, last question about gold and silver.
Yeah.
Mike Maloney has been saying for a very long time that first we would see massive deflation and then inflation and a hyperinflation. And, one of the things that I think is being really well hidden by these criminals that run the Fed is this idea that we don't have inflation. We don't even have the 2% inflation that is their goal, which is counterintuitive to a healthy economy, in my opinion, anyway. We don't want inflation. We want a stable dollar and a stable economy. But with that said, you mentioned healthcare earlier as one of the biggest parts of the U.S. economy at this point because of Obamacare and because of healthcare continuing to go up every year. I think, Andy, for many, many people in this country, one of the largest line items they have in their monthly budget is healthcare. It is absolutely spiraling out of control, and to the degree that some people are seeing their healthcare premiums go up 50% to 100% year over year. But then the Fed says there's no inflation. People are being devastated by the inflation. Now, here's the question. As it relates to inflation and eventual hyperinflation of the currency, what do you see? We know John Williams has said hyperinflation will start to be seen in 2016. Here comes 2016. Is he right?
Well, put it this way. I wrote an article about a month ago called Obamacare, the bullet to the head of the 2016 economy, and that was after my rates were increased significantly.
Yeah.
So again, for a variety of reasons. One, the bureaucracy. One, the just how poorly it's being run. I mean, the program itself, Obamacare, is hemorrhaging money. Demographics in the United States, and of course, a falling economy. All these are contributing to make healthcare not only one of the biggest line items, which is why it's now the biggest component of GDP, even though it doesn't produce anything. It shouldn't even be a component of GDP. But it's also, now you have in 2016, a lot of the Obamacare is finally going to start to be implemented. Like the part that mandates small businesses to have insurance. Remember, that was delayed. Well, now that starts in 2016. And as it ramps up, that line item you're talking about is going to be devastating, even for doctors, because their costs, the regulations, the costs of insurance, of education are so high that no one wants to even be a doctor anymore. So no one wins from Obamacare, except for, of course, people who couldn't get health insurance and are given free health insurance that no one can pay for. So that line item alone, it has nothing to do whether it's inflation or deflation because of what the Fed's doing. It's going to be devastating from a cost standpoint to everyone. And again, what Mike Maloney is saying, and I agree. I mean, I've been saying for 2 years, I've been saying commodities are going to crash, et cetera, and David Stockman and all, my thesis. But again, deflation doesn't mean everything falls in price. It means the things that businesses need to survive fall in price. But a lot of the things that we need to live on, rent is at an all-time high, and that's a direct result of the Fed lowering interest rates, causing a housing bubble, allowing all the hedge funds and the black rocks to buy up all the houses and make it unaffordable for people to own houses. And of course, now if they're going to raise interest rates, that's going to make houses even more unaffordable. So again, rents are going up, health insurance are going up, a variety of things that you don't need are going down. A perfect example. I've been able to negotiate, or the business is just changing, my cell phone bill lower, my cable lower, my alarm system lower. Because again, this is what I mean. Businesses are are going under because no one has money to spend on discretionary things. But it's not like my health insurance company is going to lower their rates, or that if I'm renting a house, the landlord's going to lower his rates. So again, it's a devastating combination of inflation and deflation of different items. Devastating to corporations on one end and to the small guy on the other end. And when you see more money printing coming forward, all that's going to do is enhance both sides of the coin. So again, what I believe in 2016 is going to happen is you're going to see a culmination of all the terrible things in 2015 and before that, and more importantly, any markets that haven't fallen apart yet. Remember, most markets have. Most stock markets, high yield markets, commodity currencies. The ones that haven't are going to have a real hard time staying above water. And then you have that lowly gold and silver market, the one that has the all-time high demand and the vanishing inventories and plunging production with all the money printing and geopolitical instability. That one is due, after 4 years of being hammered away, to turn around and get revalued to something closer to reality.
Yeah, it is, and we're excited about the prospects for both physical silver and physical gold, not the paper stuff, guys. And one last word about Obamacare. I found it humorous and ironic that one of the nation's largest healthcare providers, United Health Group, the CEO, came out not long ago, Andy, and said it was a terrible mistake for their company to get involved in Obamacare, and they are thinking about exiting it sometime soon because they can't sustain the costs. So I guess maybe that's good news. Hopefully Obamacare will collapse under its own weight. But Andy, thanks again for joining us, and I think we should wish everyone out there a very Merry Christmas and Happy New Year. You and I won't speak again till 2016, so Happy New Year.
Yeah, and the same to you. Remember, everyone, Miles Franklin, we've been around, this will be 27 years now. Write a free blog every day, do these great podcasts with people like SGT, and of course you can call us 800-822-8080 or email at ahoffman@milesfranklin.com. Have a fantastic holiday, and I'm looking forward to being with you every step of the way in 2016.
Yeah, we look forward to having you with us too, Andy, as we document the collapse into 2016. And thanks so much for your time, Andy. We really appreciate it.
And thank you again for another great year of information.
All right, God bless. And guys, thank you for tuning in. We very much appreciate your day-to-day support, where we try to give you real news 24/7 at sgtreport.com, thephaser.com, and thelibertymill.com. Merry Christmas. God bless.